All right, so in this video, I'm gonna talk about liquidity and how liquidity simply just cycles, right? Now, this is GJ. Now, before I even start this video, I want you to think in terms of being a buyer and a seller, right? Now, obviously, you have your directional bias, right? Meaning that if you're bullish, have that directional bias that you stick to. Obviously, from a smaller time frame perspective, you would essentially be waiting for harmony to just to to flow and execute. However, think in terms of being a buyer and a seller, right? Because in doing that, once you have your directional bias, say obviously GJ is bullish, so the directional bias would be bullish. However, still think in terms of if you were a seller. And in doing that, it'll help you understand why price delivers the way it does in certain aspects. Being that if price essentially has to manipulate in some sort of way, right? Because if price wants to go higher, there has to be some sellers in the market. So price essentially has to create some type of manipulation to entice sellers to sell opposite of and to either buy or sell opposite of intended order flow, right? So this is just G on the H4. We're gonna I'm gonna zoom in, right? Because what I want to just talk about just last week, right? But I'm gonna go back in replay mode. I'm gonna just take this back to here, and then we're gonna dive in to M1, M5. Let's go to the M5 first, all right? Because the very first thing I want to talk about is how how liquidity was built here, and how liquidity was ultimately built here, right? So always thinking in terms that for price to go higher, there has to be some sort of liquidity generated to drive price higher, right? Some buy side liquidity. For price to go lower, there has to be some sort of liquidity generated built to do that, right? And I'm just tying all of this in with how liquidity essentially cycled throughout the entire week, right? Everything correlates. So if we just look at all right, so the beginning of the week started here. All right. Now, if we look at how the previous week closed, New York closed here. Okay, so let's talk about how this entire move here created buy side liquidity to just drive price higher. Now, keeping in mind, we are bullish, right? So I don't think price was doing was pulling back. But let's just talk about the price action here, okay? So you got some form of mitigation way left, whatever. But anyways, liquidity built up, price then ran that. We have an internal breaker structure. Price then trades back higher, create some inducement, creates a breaker structure. Now, inducement. Let's talk about inducement. Inducement is essentially enticing a high to create a low, or enticing a low to create a high, right? Enticing a low to then create a higher high internally to just drive price lower. Now, the thing about inducement is I like to look for inducements at key levels. And what I mean by that is that from this M5 structure, if I look left here, retail will see this. What does retail see here? What? Head, shoulders. Head, shoulders, support, resistance, right? Key level in the market, which would be inducement, inducing a low. So the only thing that's doing is building liquidity, but then price it then come back in to mitigate true supply, which is here, to then just drive price lower. So here you have the inducement, price, Asia, market opening here. Asia comes up, mitigates that, drive price lower, right? Now, internally, obviously, we're bullish. All right, so then we just understand that the previous day, London creates this big unsustainable range that price has to come back, essentially mitigate, fill. It's gonna get filled, right? At some point in time. So Asia comes back, mitigates demand down here, right? Now thinking from, remember what I said at the beginning of the video, we have our directional bias, right? But to understand how prices manipulation building liquidity, you have to still understand both sides of the market, right? So from a seller's perspective, internally, we have a breaker structure, right? You have a high that maintains, mitigates, nice push out, breaker structure, right? So what is price? So from a seller's perspective, what does this look like? Price comes, returns back to supply. We should be expecting a sell-off, right? Now internally, this is where liquidity builds internally of this move. You got the mitigation. What I love to see here, right, is when you get some, liquidity build, purges that, change of character, price change of character, strong move out, maintenance, higher high, right? Now, this is Frankfurt. I always remember Frankfurt is a very key part in the trading market between 2 to 3 because it often manipulates price in the opposite direction of internal order flow. Now, right here, the beginning of Frankfurt, you had M5 inducement. Now, I'm gonna dive more into this whole setup here once we get over here because it'll make more sense. But we had some M5 inducement, right? If we just look left, we had some mitigations, right? But also, like I said, look for inducements around key levels for potential inducements, right? So internally, had an internal inducement, which drove price higher. Now here, this just becomes London buy side liquidity because remember, we're thinking from a seller's perspective. Now, this is easy to see in hindsight, obviously, right? But if you was watching this real time, you're building a case. So, like, if this is in like the Wyckoff ideology, this would be like your phase B that you don't necessarily have to trade in, right? We obviously see in hindsight that from here it went higher, but in here, me looking at this was me building my case. I'm not necessarily trading here. I'm just understanding what's taking place. I know that there's liquidity generated here from a seller side of perspective, and I know that there's liquidity now generated here from a buyer side, potential liquidity generated from a buyer's perspective, right? So then you have your internal inducement, right? Internal inducement. Price then comes down. New York runs the M5 inducement, just mitigates off the order flow here and trades off. Now, I want to zoom into M1. I want to zoom into M1 because post this mitigation, even before this M5 inducement, you had some M1, very small inducement here. All right, had your liquidity build. Internally, your change of character could have been here, breaker structure here, however. But here, internally, you had inducement, right? And like I said, I always like to look for inducements at key levels, entice a high to then come back and create a low, build liquidity here. Right? It's all everything is it's all fractal. You can find the price does this from an H1 perspective. Just understand that when you're looking at those time frames, it takes longer to play out. It doesn't happen as often, right? But on these M1 time frames, everything is fractal, right? So you literally had M1 inducement from a small scale of things. Now, I didn't see this beforehand, but I seen it afterhand once I seen how deep the retracement was here. And I'm going to actually what I want to do as well, I'm going to just draw a line here and extend it across, because you'll see how price comes back and then builds liquidity at this same exact zone once again before the mitigation. Right here. See how price came right back to that same inducement level, generated more liquidity, right? But then price to purge here, change a character, break a structure, off to the races. Now understand how sessions correlate. Once New York, I used to not, for a while, I did not understand, the opening here and the beginning of Asia. I just always think shit was just random. It might, I didn't know, because most of the time, come this time in the day in between, 5 and 6, I was never really actually looking at the charts. But now, having a better understanding of the charts, once the order flow is intact, you have your change of character here, breaker structure here. Internally, watch the inducement here that New York's create internally to set up the next day, right? So internally, you have your M1 inducement, entice a high, right? If we look left, if you look just left of here, what's this? A key level. A key level. And right below this inducement, another thing about inducements too is if when you find it, when right below the inducement, if you see some sort of supplier demand zone that price just barely come all the way to the mitigate, you could potentially know that there was inducement, right? Once again, price comes back, build that liquidity right before it, price then mitigates here, New York. So New York sets up the order flow. Then you got your mitigations coming in. You got to run on your liquidity, break a structure, mitigation, nice bullish order flow building here. Price then trades out, right? So then now we understand why the market opens in a very corrective behavior. Now I understand this. I understand that spreads are a little bit high, but I understand what's going on here now, right? So then Asia. So then your new daily cycle begins, right? So also before I go any further, I want to think about this. Trading is as simple as the new daily candle here, right? If I'm expecting this candle to be bullish, to close bullish, what I want, the low or the high of the day printed first? The low. Okay, that's just thinking is very simple, right? So because at this point I know I'm very confident. I got my breaker structure, broken all this to the upside, right? We have now made equal highs with this London buy side liquidity. Thinking still in terms of, always remember, let me zoom back out to the M5. Always remember that we have our directional bias, but we're still thinking in terms of, okay, if I was a seller in this market, why is price behaving the way it's behaving, right? Price then comes here, creates equal highs with London. Once again, mitigating off of this. Sellers, obviously sellers selling this, because at this point, what does this look like from a retail perspective? This just looks like support, right? You know, and then another good key point is that these highs created at London, like this London buy side liquidity, and also this high created during Asia, if you look left, they were created at the same level that the previous inducement took place at, right? So thinking in terms of, you know, retail, sellers market, once again, this is what now support, or what you know, we call resistance, support resistance, whatever resistance, you know. So all that takes, you have to take all of that into account, and then it helps you understand what's going on. Now, once again, zoom back into M1, once again, Frankfurt between 2 to 3 manipulates price in the wrong direction, right? But internally, not understanding what's going on here internally, you have some M1 inducement here. You know, if you just look left, this right here was an inducement. Just barely mitigates this. It does mitigates this demand zone here. Just barely nicks it. Trades higher, creates this unsustainable price range, which I like to see, right? But if we look left, you can see this key level right here, right? For price to then come back, create the liquidity here. This is your perfect, you know, buy right here, my opinion. You don't have to take this, but at this point, this is what I like. You know, I'm going long here. But nonetheless, you got liquidity built, price then comes back and mitigates this from a small, like you had the seconds on here, from a very small scale of things. You had your liquidity build here. Price then leaves this demand wicks to mitigate this, goes back and breaks structure, change the character, then comes back and mitigates this demand zone, trades away. Now, internally, understand this internally from a seller's, because this is where this can get confusing, right? You know, because I almost got tricked up. Well, no, okay, I didn't. But you could potentially get tricked up here because the way price holds come London, it's kind of like, well, why are we struggling here? You know, just go at this point if this is what it is. Well, you have to think from a seller's perspective internally, what happened here? From a scalp perspective internally, what happened? You know, you got scalp breaker structures to the downside. You know, so from a retail seller's perspective, you know, you got your resistance, scalp breaker structures. They're sellers here. They're sellers here. You know, think even in terms of from a seller's model, not even knowing any of this is here, there's inducement here. Look, right at a key level, inducement. You know, price then comes and runs that. Why not go lower? Right? Because the intention is not to go lower. But Frankfurt, what will Frankfurt do? Manipulate, entice a low, you know, induce a low, because this is inducement, you know, here to then create a high. And then obviously price goes in this intended direction, right? And we break this liquidity here. Price goes in this intended direction. So before we go any further, let's just recap. The start of the week generated the buy side liquidity here, right? All the sellers potentially coming trying to sell off the markets here, right? Now, understand that we do understand at this point in the market, I did understand that GJ had been extending for a very long time, right? So I did understand that there could be a potential pullback. Now, I'm not trying to force a pullback and playing it very safe, obviously, because it's very bullish, but liquidity build here. And I understand that all of this here could ultimately be building liquidity here. right? Which is why I had this here, because if a sell model was presented, this right here was my first target, right? So nonetheless, I'm going to actually just jump out of replay mode, just fast forward. So nonetheless, we get this. Once price leaves this range, once I seen this here, then for the ending of the week, I wanted a sell, right? Once I started seeing this here, these prices leaving off, leaving all this unsustainable ranges like here and here. Okay, I'm thinking more so in terms of sales, and only because at this point I could see how the behavior of price started changing. Right here, you could tell price here was nearly overextended. This last rally up to then go run liquidity here, run this high, come back, break this. Now this right here was interesting, and I'm about to dive into this, but I just wanted to talk about this here because more so in this area here, I was just more so watching price. Got this extension here, and just more so monitoring. All right, so didn't understand how price comes back, mitigates off of something here, which makes sense. Probably some form of mitigation here drives price essentially higher here. But now let's understand this, right? So here I had the unsustainable range created on New York, right? Price then drops higher, takes the liquidity this high, right? And then we get this drop off. So now I'm interested. I'm interested at this point, right? Because at this point, this is Thursday, we're coming up on Thursday. So now I want to dive into here, this internal structure here, and talk about how liquidity was built once again, right? So Asia drives off. The beginning of Frankfurt, you had some M1 inducement. All right, just look left. You can always just remember it. I like to look for inducement at key levels. So from an M1 structure, what does this look like? Some resistance. So in other words, inducement. London, Frank. So inducement breaker structure, but not entice a low to then create a high. London comes and runs that. Then comes back necessarily thinking from a seller's perspective. Now you would sell this, the price then drive lower, right? But then there had to be essentially the only thing Asia was doing at this point was in building liquidity. Now, this is easier to see in hindsight, but you start training them. It's just follow price and build narrative. So at this point, I'm just building narrative, right? Not knowing any of this is here, right? My direction at this point was not clear for sales because buys could potentially still be valid here, right? I'm not saying buys out the market, but once the beginning of New York comes and runs this buy side liquidity of Asia, and then now we break structure to the downside. As you can see, my structural points come in. Now I'm focused on seller's market, right? Now let's talk about how New York sets up the next day, right? So we have some M5 inducement. New York then breaks the structure right here to the downside, has some M5 inducement, right? If you just look left, what is this once again? Right at a key level in the market. Remember, I always look for inducements at key levels, right? So M5 inducement, which sets up the next day. Because me personally, I took a sell here, aiming for that low again that was created at the beginning of the week. Didn't get it. It's cool because now, okay, I understand, okay, potential inducement. Take the sell for a potential inducement. It's got stopped out break even because I went break even at this low. Once I seen New York didn't take this, okay, and I seen you had your actual true supply was here. It takes liquidity, then break structure, so the candle that done that, price comes back and mitigates that. from here. Then let's talk about this internal structure now, because think about it now. I want to close the week selling, right? But still I have to think in terms of that, okay, if I was a buyer, how is this setting up to build that liquidity, right? And what is it doing? Because internally, some form of mitigation here, internally price breaks back structure to the upside, right? Thinking from a bullish perspective, Asia creates inducement, look left, in one inducement, key level, right? Because from a retail perspective, what does this look like? What they would call this a head and shoulders, you know. So inducement, some key levels, M1 inducement, London comes back, mitigates demand in here, and then breaks structure back to the upside here, right? So thinking from a buyer's perspective is that, okay, I see how this is now building liquidity for price to go lower, not for me to be buying here, because I understand I'm already solidified here. You know, I have my directional bias from just to close the week was generated here, but now I just understand from a buyer's perspective how liquidity is still being built. You know, the manipulative part of the manipulative part of price action. You know, because not understanding this, you would potentially, I put this, I'm gonna jump down to the M1. I put this here, potential demand, because understanding how this set up so perfect for a buy, not understanding how price is essentially manipulating a buy to just drive price lower. You know, you got the mitigation left, price break structure to the upside. Even look how liquidity is built before liquidity is built, price then comes, purges that liquidity, but we never comes back and break this high. So at this point here, acknowledging this, at this point here, acknowledging price here for my sales to be valid, I didn't want price no higher than here anymore. Oh, I did that. Right, for my sales to be valid at this point, I wanted price no higher than here. Right? Because if it did, then now this looking at, because you have to think at this point, I was looking at this in real time. You know, obviously I have my directional bias, but I'm still understanding the buyer side of the market, how it potentially building liquidity. But still, I don't know. You know, this could have mitigated here, broke this, which to me this would be more so some form of inducement, you know. But for me to go all the way for price to shift back bullish, I would have at least needed this high. You know, this wouldn't have been really convincing for me if we did break this. But at this point in the market, I wanted this to maintain, right? So internally, what that was doing though, from a buyer side, for the buyers that was buying here, it was just building liquidity. You know, people buying here, one last buy op, people buying here for price. New York, just come take that liquidity. So once again, another solidified range. Right, you had inducement, M5 inducement. Yeah, M5 because it came back and out and just barely mitigated this supply zone here, right? And also, if you look left, like I said, I always remember this thing for inducement. If you look left, you can just see it's happening right at a key level in the market. Right, you got your M5 inducement, then boom, easy short, then no. And then first target is obviously here for me. First target is obviously here. this that was created at the very beginning of the week here. Liquidity created at the beginning. Sale took care of beginning. Liquidity created at the very beginning of the week. So, like, flowing with price, understanding how price has to create a reason to go higher and lower. You know, this liquidity built here. This liquidity had to be built to give price a reason to want to drive back. Take this. You know, there's always reason. You know, there had to be some form of liquidity generated here at the very beginning of the week to drive this last push up. You know, these last push-ups. And then just to understand the exhaustion at this point, because all these unsustainable ranges that just started being created, you know, from a very micro perspective of price. It just became very unhealthy. No mitigations and things of that nature. So yeah, I just pretty much wrapped this video with that, but just understand that, you know, once you get your directional bias, still understand the opposite side of the market, because it'll help you kind of understand how price can be manipulating. And then just simply wait until price shows its hand. Just like here, I don't care about catching a sale here. Looks cool, but this got me paid, you know, the conservative stuff, you know, like, because at this point here, because at this point here, you know, looking at this in real time, I don't know that this is just going to go lower from here, you know, but it's just me building a narrative after I've seen what I needed to see here. Then it's like, okay, you know, I got my follow through here just internally and just sell off. And that's even if to go back to here is that, all right, I'm going to just zoom back in right here real quick, because a very conservative entry is not even not understanding right here. A very conservative entry. Not understand, like, seeing this, but still being nervous at this point was like, this right here was essentially your icing on the cake, right? Let me just erase this. Regression. Some form of regression here. All right, form of regression. Priced in post this regression. You got some mitigation. So your optimism, you know, come back, some smaller time frame stuff going on here, some seconds, but your maintenance, impulse, which breaks all of this, you know, breaks this. All right, so then from a micro perspective, this even becomes a very easy conservative entry. And if you just, it was a 2 minute. I'm not going back through all that again. Let me take this off too. It's off anymore. Let me jump back to replay. So if I jump back down to the 2 minute, there was inefficiency here. That was easy to play right here. Payday. Wherever you want to put your stop, down here, right outside of it. I go just right at the top of that. Up to the races. All right, so even not understanding this, you know, not understanding this, still feasible. You know, I wasn't concerned about catching this here. Yeah, I could have, you know, easily, but it's still at this point, I'm still waiting for price to really show me his hand. You know, and then once we got here, and I could see this here, I'm still looking left and seeing, okay, all this is still taking place at this made what was previous inducement level. Equal highs created here. I was like, okay, I'm very confident now, which gives me the confidence to take this. Then obviously, if not, by this point, it's like, okay, I'm definitely gonna take this, you know. So that pretty much just wrap this up.